1.3.4. The information provided is an extract from the records of Always Limited for the financial year ending 28 February 2025. Required. Use the information and complete the open accounts in the General Ledger of Always Limited and close it properly on 28 February 2025. Information. Number 1. Ordinary shares. The company has authorized share capital of 4 million shares. On 1 March 2024, 50% of the authorized shares had already been issued at an issue price of 7,600,000. On 30 April 2024, 500,000 shares are bought back at R4.10 per share. On 1 November 2024, 200,000 new shares are issued. On 28 February 2025, the balance of the ordinary share capital account shows the value of issued shares at R6,800,000. Number 2, income tax and net profit. On 1 March 2024, the SARS income tax account shows that R18,000 is still due to SARS relating to income tax of the previous financial year. On 20 March 2024, the outstanding amount is paid via EFT to SARS. On 31 August 2024, the provisional tax liability for the first 6 months is estimated at R250,000, and EFT for the amount is made to SARS. The total provisional income tax liability for the year is estimated at R725,000, and EFT for the second provisional tax payment for the year is made to SARS on 15 February 2025. Company tax is calculated at 30% of the net profit. The net profit amounts to R2,500,000. Ordinary share capital account. We will start on the credit side with our opening balance. So 2024 March the 1st. We will write balance brought forward. And our balance brought forward is 7,600,000. Then on the 30th of April, we bought back 500,000 shares at R4.10 per share. But remember, the amount that we record in our ordinary share capital is the average price per share. To calculate the average price per share, we have to work out the ordinary shares in issue at that date, and they say 50% of the authorized shares had already been issued. So 50% of 4 million shares will be 2 million shares. So 7,600,000 divided by 2 million shares gives me R3.80 as my average share price. So we will say 500,000 times R3.80. So on the debit side, 2024 April, it was on the 30th of April. We will write bank because we're making a payment. Goes to our cash payments journal. And 500,000 times R3.80 gives me R1.9 million. Our balance carried over as stated in the question, is 6,800,000. So we will have a balance carried over $6.8 million. To give us a main total of 8.7 million. The debit and the credit side must always balance. So on the credit side, November the 30th, we issued new shares, but they didn't state at what value. They just said 200,000 new shares were issued, so that will be our balancing figure. November. Bank. We will go to the cash receipts channel, so we are receiving money. And our balancing figure will be 1.1 million. $8.7 million minus 7.6 million gives me 1.1 million. Then also on the credit side, March the 1st, balance brought forward. $6.8 million. So as income tax, on the credit side, we will have an opening balance of 18,000. So 2024, March the 1st. We will have a balance brought forward. $18,000. This balance owing was paid to SARS on 20 March 2024. So on the debit side, 2024 March. The 20th. Bank CPJ, because we're making a payment to SARS. $18,000. So now the credit and the debit side is square. Then on August the 31st, we made a provisional tax payment of 250,000 Rand. So August 31. We will write bank. Also the cash payments journal. $250,000. Then on 2025, February the 15th, the total provisional income tax liability for the year is estimated at 725,000. So we need to then still make a provisional payment of 475,000 Rand. To calculate that amount, it was the 725,000 minus the 250 that we've already paid to give us 475,000. So 2025, February the 15th. Bank. Cash payments journal. $475,000. Then the company tax is calculated at 30% of the net profit. The net profit amounts to 2.5 million Rand. So 2.5 million Rand times 30% gives you a total of 750,000 Rand that is owing to SARS as income tax for the year. So on the credit side, 2025, February the 28th. We will write income tax. General journal. $750,000. So that means we owe SARS 25,000. So we'll have on the 28th a balance carried over. 25,000. To give a main total of 750,000. And that will be the same as the credit side main total. So on the credit side, March the 1st, we will have a balance brought forward of 25,000. Exercise 1.4. The following information is taken from the records of Vuvuzela Limited. The company's authorized share capital consists of 500,000 ordinary shares. Required 1.4.1. Complete the open accounts in the general ledger of Vuvuzela Limited for the year ending 30 June 2025. 1.4.2. Complete the missing information in the notes of the Statement of Financial Position or balance sheet on 30 June 2025 for A, the ordinary share capital, and B, the retained earnings. 1.4.3. Calculate the average issue price per share on 30 June 2025. 1.4.4. Comment on the dividend payment policy. Do you think that the dividend declaration of the current year was a wise financial decision? Provide figures to support your answer. 1.4.5. Calculate the total owner's equity on 30 June 2025. Information. Balances on 30 June 2024, the end of the previous financial year. Ordinary share capital, average issue price of R5.30 per share, amounts to 874,500 rand. Retained earnings 265,000 rand. SARS income tax debit balance 11,400 rand. Shareholders for dividends 92,400 rand. Transactions 2024 July the 12th, the amount owed to SARS is paid via EFT. August 15, the final dividend relating to the previous financial years transferred via EFT to the personal bank accounts of the shareholders. December 18, a provisional tax payment of 103,000 rand is paid via EFT to SARS. December 20th, an interim dividend of 60 cents per share is declared and paid. 2025 May the 20th, 15,000 shares are bought back at a price of R5.90 per share. June 15, an additional 50,000 shares are issued at a price of R6.34 per share. June 20th, a second additional income tax payment of 128,000 rand is made via EFT to SARS. June 30th, the correct net profit before tax as calculated in the profit and loss account amounts to 870,000 rand. Company tax amounts to 27% of the taxable net profit. A final dividend of 80 cents per share is declared. The first calculation that we need to do is to calculate the number of shares in issue. So remember, to calculate the number of shares in issue, we take our ordinary share capital at the beginning of the year, which is 874,500 rand, and we divide by the average issue price of R5.30 per share. So let's do the calculation. So it will be 874,500 divide by R5.30 per share. To give us 165,000 shares in issue. The second calculation is to calculate our final dividends that needs to be paid over. So remember, we've just calculated the 165,000 shares at the beginning of the year that is an issue. Then we repurchased 15,000 shares, and we had an additional shares that we issued of 50,000. So to work out the new amount of shares, we are going to start with the 165,000 shares. We are going to minus the 15,000 shares that we repurchased, and we are going to add the 50,000 shares that we issued. And that gives us a total of 200,000 shares. And then we are going to multiply that with 80 cents. To give us an answer of 160,000 Rand, and that would be the final dividend payment.